there's a saying in San Francisco that a fintech that achieves $1 billion valuation is an overnight success, 10 years in the making, right? So Santander track record over 10 years shows that the strategy is delivering, but it has taken time to build state-of-the-art platforms. The fact that Verizon has chosen Open Bank is huge because it validates our platform. They could have gone with almost anybody else in the United States. So it's very important that what we build is as good or better than the best. Again, the fact that Amazon and Apple have chosen Santander instead of the alternatives, Klarna, in this case, is probably the best, we are better. And it's not me, it's like the major, digital retailers going with us.
Just finally, let me ask you about interest rates and Europe, because I was just talking to the Belgian central bank governor, and he indicated perhaps there would be a case for pause in interest rate cuts, given all the uncertainty coming around tariffs. And of course, we're talking about that 25% tariff today on autos. What do you think when you look at your customers in Europe, when you look at their intentions on lending, their risk appetite right now, is there a case for pausing, or would more reductions be warranted?
The fundamentals of the economy are strong, but the uncertainty and the volatility is at historic levels. So it's a really hard decision. So there is no doubt that tariffs are a tax on consumers. It means slower growth and it means higher inflation. How much slower growth and how much higher inflation, we don't know. But when you don't know what's going to happen in the next few months, you're going to wait to buy a car. You're going to wait to buy a fridge. If you're a company and you're going to put a factory, you're going to wait to see whether tariffs hit harder. So this is going to mean a slowdown in activity. That would point toward lower rates. Inflation would point the other direction. As of today, we believe the US will slow down more than Europe. Other things equal, because Germany is 1/3 of the economy of the Eurozone. That's huge. So that's going to give a boost. That's why there is more investment in banks like Santander. We're up 50% this year. And so on a relative basis, in the short term, Europe will be less affected than the US. So again, there's a case to be made for rates coming down, but probably not as fast.